Alright, let's just do this real quick. I want to make a quick little video about triple bottoms. You might know them as double bottom pullbacks, head and shoulders, inverted head and shoulders, wedge. Like there's different names that you might know this pattern by. The names aren't particularly important. What is important is the recognition of the pattern. And at its core, these patterns are all variations of a three push pattern, which I'll go into in more detail in another video. But I just want to do something really quickly here. So we kind of have a few different examples on this chart here, and the one that really got me wanting to talk about this in the first place was this one that we had here. Um, Variation of a triple bottom. On the other chart, as you'll see, the low of this one is not nearly as close to the low of this and the low of this, so it doesn't feel as much of a triple bottom, but like I said, it's just a three push pattern. That's the most important thing to recognize. So this one, maybe people might call it like an inverted head and shoulders. I really don't like the term. I really don't like the pattern head and shoulders, just because they're often discussed as a form of a reversal pattern, when in fact they're oftentimes continuation pattern. So I just don't even really like to acknowledge the head and shoulders concept as a concept, but yes, this is what we're going to be talking about. How did I expand that here? Did I do like that? Ah, sick. Okay, love it. Okay, so then we can do the same thing here. Perfect. So here we're going to have a few different examples that we will kind of go into. This one here is a bit of a wedge. This is kind of a wedge, almost like a triangular pattern. Here we have a more straightforward sideways sideways trading range. Here we have a channel with three pushes, and then this one that we're going to get into when we're able to drill it down on the lower time frame is the one that we just showed on the other chart. In fact, I'm just going to, since it's so easy to go back and forth, I'm just going to use this chart for, well, it's just busy and I don't want to delete any of the stuff on here, so I won't. Okay, so let's start here. The three bottoms, they don't need to be at the exact same level. Let's take this one, for example. These three bottoms are ascending, right? Excuse me. And like in the one that we saw over here on the 1 hour chart on the other chart, these are also not at the same level. This is clearly lower than here, and this is a little bit higher than here. And that's why sometimes you'll hear them being called double bottom pullback. Some people say things like there's no such thing as a triple bottom. And it's kind of true, I guess, because usually you get the double bottom and then you have a double bottom pullback. So um, yeah, the like I said, the specifics of where exactly the bottoms are is not so important. The name doesn't need to be so important. The form that the three pushes take is not so important. It's just important that we recognize that it's a three push pattern, and three push patterns are indications of exhaustion. And I'm going to explain why very briefly in a second. Um, so a triple bottom, it usually will form as a sort of trading range. Like we said, you might get a horizontal trading range, you might get a diagonal channel trading range, you might get a wedge. This is also kind of a wedge or a triangle, etc. And it can feel a little bit tricky to trade, but the first important step is recognition. So let's start with why do they form and what exactly do they entail. I think we all understand the psychology behind a double bottom reasonably well, right? Price hits this hits a level and then bounces back far enough that traders acknowledge that this strength that brought us to this level in the first place should continue, and so it's going to be a little bit heavier, and there are going to be more bears looking to enter short to take us down. But this was enough strength from the bulls that it's possible that there may be more bulls down here and we may not have as many sellers and we might get another bounce here, right? Maybe at a higher low or maybe at exactly the same level, maybe slightly below, whatever the case may be. So usually when you have this strong spike down and then a strong retracement spike upward, this is usually the first step to forming a trading range. Oftentimes what will happen here is we'll form some sort of trading range, right? So when you see these spikes like that, you can assume we're getting into a trading range. Just because we know that bulls are here to attempt to regain some sort of balance, right? They're not just stepping out of the market and allowing sellers to do what they got to do. They're wanting to step in. They're wanting to make some money. They're being allowed to make a little bit of money here, right, on a strong enough bounce. Sometimes you just get a really strong bounce push down and then a really weak bullish reaction, and then you just kind of roll over and continue downward. That's not what we're talking about, right? Like that will happen. That's going to have happened like here, and we continued downward to all the way down here. But then what happened down here, we got an immediate strong spike back up on this candle and then on the subsequent candle that takes back almost the entire thing. This is a trading range in the making. Okay, so because that initial spike down is fueled with so much bearish strength, we are still expecting that more sellers will enter here, looking to push us back towards the lows. But because we know that bulls are around in the area and they're looking to exert some sort of strength, if we do take this short, we decide to take our profits somewhere near the low, maybe a little bit front running the low. Maybe we're willing to let it go past the low, depending on context or structure, etc. But we are looking to take our profits at the low, expecting again that we are going to be forming a sort of trading range here, and are therefore not quite ready to take new extremes to the downside, right? So everybody ends up buying the bottom. Bulls are initiating new longs. Shorts are taking profits on their shorts. And we get this second bounce here. Somewhere in all of this, we begin to form some sort of recognizable structure, maybe like a horizontal range, maybe like a channel, maybe a wedge, right? It kind of depends on how this reacts. Like if we come back up here, it's clearly kind of a horizontal trading range here. Maybe it kind of ends up going a little bit further and then we kind of make a channel, right? Or a wedge like we have here. Excuse me. Okay, so if bulls now, after we break this and put in the second bounce, if bulls show enough strength to again start to break some like micro trend lines, like this micro trend line, or maybe like this a little bit of a more of a trend line kind of thing, but not quite strong enough to reverse the market upwards, right? Like maybe we just break this, but we take another shot down here, kind of the thing. If bulls kind of stall here, then maybe we'll take another opportunity to try and again breach the lows. And sometimes you get a full breach of the lows that retraces back upwards, or sometimes you just keep going down. And sometimes we get this third bounce that again respects that low, and we start to bounce upward. So the first thing that we can recognize is right here. If this is our major-ish trend line, right? Once we bounce here and then we take this here and get another bounce here, we should know that the bearish momentum has really all but waned. We no longer have any strong bearish trend line, and there's nowhere really to go but upwards. But I'm a little bit getting ahead of myself. Excuse me. So instead of drawing, let me just kind of zoom in here a little bit and let's just kind of go through it for real. So like we have that strong spike down, right? Trading range, building the trading range. We get another test of the low here. And I'm a little bit ignoring some of this stuff. It's not necessarily to be ignored because obviously there's always good information in here as well. But since we're just talking about these three pushes to the low, triple bottom, quote unquote, we get this bounce to the low and bulls again step in here. But this time they're not able to get even as high, right? Like this time we were able to get all the way to the top of that what we thought could be a horizontal trading range, and probably ends up looking more like this is a horizontal trading range. But this time they're only able to get up here before they run out of steam and bears are able to step in. Well, bears are going to step in here and bulls were able to kind of break this micro-ish trend line, put in a double bottom of sorts here, and push back up towards this level. This is not what bears want to see if they're looking for a momentum play down towards 20K, right? So bears are going to be a little bit wary that there's enough bullish strength here, even though the bulls are not able to take any new highs. We are going to be a little bit wary that if we don't immediately just dump straight down like this, if we do a grind kind of like this, and this is in a channel of its own, we have yet again a very clear profit target with these lows, and we're going to take some profit here. And once the bears take the profit here, the bulls step in, and we get this strong push back, and then even start to begin this rally. Start to begin this rally. There's nothing to do. There's nothing left to do but buy. You kind of just have to buy because now we're getting back to pushing above these levels. If you were taking a short anywhere in here, you're going to be underwater like the moment we start breaking above this level. And this is so strong off of 3 pushes, possible exhaustion. Why is 3 pushes exhaustion? Because the longer it takes, the less momentum bears have. And they don't have any momentum over here. This is like a clear channel. So this is not just like there's nothing to do but sell. Obviously, bulls really aren't making money here, but they're able to push back enough such that bears aren't making easy money the way they were making easy money here or here, right? So bears are a little bit exhausted, and once they finally put in that third push and bulls start to buy it back, bears have to unwind the shorts. There's nothing left to do, and then bulls are obviously going to initiate longs. And then like once you're back here, what else is there to do but continue upward, right? So that's just a quick example of the kind of how the 3 pushes a little bit work. Basically, especially with this triple bottom, like once we get this third one here, the stop level is now very heavily fortified. If we aren't able to get a strong bullish bounce here, and then we just keep grinding again and again and again at this level, I think the more times we touch it, eventually we're going to start to expect it to break through. But in the absence of that, we start to push higher. Definitely 1, 2, 3 times touch this low. Very, very, very fortified stop. Very clear stop level. Everybody's going to have their stop underneath here. So that means that everybody's going to do their best to defend it. The bulls are going to do their best to defend that stop level. Because the moment this gets breached, like we just get a very strong spike downward. Even if they're able to buy it back, like it's just too much. Bulls really don't want that. So yeah, once we get this push up through here, there's nothing to do but buy. And oftentimes you get something really strong. Like you get this. I don't want to delete. I don't want to clear everything off the chart. But yeah, you kind of just get a strong spike. This is a very strong candle, right? Especially to reverse these last couple days of strong selling at the low. Just nothing to do but go upward. Here we kind of had a similar thing. We had 1 push up, 2nd push up, 3rd push up, and then the sell-off becomes very drastic, and it starts very strong, and then it accelerates drastically, is what I meant to say. And if you look, like you'll start to see these like everywhere. Like you can say like this is to an extent like a 3 push pattern, 1, 2, and then 3 pushes kind of thing. Like it's just something that happens all the time in trading, and sometimes it can even be a little difficult, a little bit tricky to spot. Like for example here, if we take this one, maybe you're going to say this is 1 push. Let me put arrows. Maybe you say 1 push is here, first push. This was the 2nd push up, and then this is like the 3rd push at the top of the channel. Well, even if you do recognize it this way, there's still money to be made shorting this down. But when you see like this really strong, almost flaggy kind of price action that we're seeing here, these, again, same thing. When you get a strong spike down and a strong spike up, what are you thinking? Trading range. So we build, what is going on there? We build like a horizontal trading range here, such that when we get back up here, small bar, you can take a short underneath it, take it back to the lows. We're back at the lows, bulls step in, and then you almost have another form of 3 pushes if we draw this kind of in a channel. You're going to have 1 push down, 2nd push down, here was a 3rd push down, bulls step back in, and now what is there to do but buy? And then same thing up here, you get back up here, and maybe you say, okay, this was kind of 1/2 of this move. This was really the start of the first push, and then here's a 3rd push, and now we're going to be looking to get back to the start of the channel off of this, either this spike in channel, or maybe you just say this is the spike, and this is the subsequent channel, and we're going to look for a test of the channel start around here, and it happens immediately, actually. Let's talk about this one real quick. If we could break this down on smaller time frame, again, we'll see that you can either say this is 1, this is 2, and this is 3, or maybe you see this and this is 1, 2, 3 following this strong move. Like I said, if we're breaking it down on low time frame, what we might see is that this whole thing is one move. These 3 bars is kind of one move, you could say. And same thing, get 3 pushes down, and then what do you do here now? Like, you feel like you're in a trading range here, but this bar is so strong, pushing back up, and now you're like, am I supposed to buy the top of the trading range here? We're near the high. It doesn't make sense to be buying towards the top of the trading range, but then this bar just continues upward. You don't even really get a pullback here. So what are you supposed to do now? Like, you breaking out of the trading range. I guess you can wait here and then try and pick up a long, like on this candle or on this candle. I mean, this candle, once you get this candle, you know, right? This is an outside up bar following insane strength here. Small inside bar near the high. Took out the high. We're still staying near the high of this bar, so that's very strong. And then um, this is an outside bar, and this is another outside bar. This is an outside bar. So this low is like extremely fortified, and you just have to buy above this with your stop down here, and there's nothing really else to do, and we just keep rallying. Any other good ones that we want to talk about? I think, just as you'll just start to notice 3 pushes everywhere, right? Like here we have 3 pushes, 1, 2, 3 pushes, and this time it actually doesn't work out. Bulls aren't really able to do anything with it, and we just continued down for more. And this ends up being almost like a measuring gap, not quite, but just kind of a bear flag, I guess you could say, even though it's kind of like a bear channel, almost like a bull flag, but bulls aren't really able to do anything with it, and they have really violent spikes. So that's also important context. You want to check the strength of the spikes. I didn't mean for this to be a 20-minute video, but I did really want to get into this last one here. Again, see, like this level does not quite come down here, so this isn't quite a triple bottom, but more of a, like, I don't know, more of like a 3 push pattern, 3 pushes down, and then like a pullback, second chance opportunity here. Like I said, it doesn't really matter what you call it. The thing that is important is that you recognize the signs of potential exhaustion. So here we have really strong trend line, gets broken, put in another leg down, and then we get this weird sideways thing where we should have, if we were going to continue down, we should have continued down somewhere in here, and then we got stopped, pushed back up here into this little horizontal trading range here, and then we dumped lower. So this is the lower low test of the break of this trend line, and then we get a strong spike back up to the top, really, really certifying this horizontal range with this tap up here, and then we take it back down to the bottom. And then what do we do when we get this ridiculously strong spike upward? Well, you do have 1 push here, 2 push here, 3 pushes here. You do have strong push down, second leg down, lower low test, bring it back up here, which should not be happening if we are going to continue to go down lower with extreme momentum. So that's how you can tell that, this is very reasonably a possible end to the bear move. And again, strong spike down, strong spike back up, trading range. And then we push back down to the bottom of that trading range. Let's delete this now, because now you can almost draw it like this. Not the best drawing, but you can see that we've broken this micro trend line, and we've definitely broken this micro trend line, right? Like this one here, and then even this one following the bounce back. So a lot of little micro trend line signs of strength bulls are showing us here. We test the low again, and then super strong buyback candle. Nothing to do but unwind the shorts and initiate longs and just buy. All you have to do is buy now. And again, same thing. There's so much urgency to buy. You don't even get a pullback. Like, you might be waiting. You might be hoping, like, we're going to get like this and then get to go. And that would be like, this is double bottom, and we're looking for a double bottom pullback. But in this case, this actually ends up being the pullback. So we don't get any real pullback, and then it's just going, and the first real pullback that you ever get is here pretty late in the thing. Okay, so this was a 20-minute video. I didn't want this to be 20 minutes. I wanted to be very quick. I really thought this was going to be like 5 to 8 minutes. We ended up doing a lot of talking, but I give several examples, and none of them to my standards of satisfaction. So I hope this is kind of useful, but I expect it's not going to be as useful as it could have been. So I'll probably have to redo this video or give a better video with a little better context, maybe better examples, more thorough detailing of the content. Like, I just wanted to give a little bit of context here. I will have to, yeah, I will do, I was already planning to, but I will definitely do a more thorough analysis of 3-push patterns in a different video and like kind of talk about the psychology behind them, give a little bit more detail about the inner workings of what happens. Because like one of the things I wanted to talk about is just like the psychology of like what is going on here. Like how are you evaluating that like we have this strong spike down, we get into a trading range here, like we recognize this as a horizontal trading range up until this part, and then once we get stopped here, that's only then do we start to like build this type of trend line and acknowledge that maybe we're going to be pushing down. And then like sometimes, not in this case necessarily, but like you can kind of draw here like a channel, and you have like 1, 2, 3 taps of the channel, almost like 3 pushes that kind of push back up. It's like as the price action is unfolding, you're doing all types of different you're drawing all types of different lines and patterns and things like that, just as you're recognizing things. And then slowly and steadily, as you get more and more and more and more and more information, you start to really kind of put 2 and 2 together and make head or tails of what's going on here, and recognize, oh, we're getting a possible 3-push pattern down into this triangle. And like this is a descending triangle, so what is the expectation that like we're going to push down through here? Like this is going to be a continuation pattern to the downside. So when you have an expected continuation pattern to the downside and it just bounces up like this, then you know that you're really, really in the wrong. And that's how this type of move happens, because this is just a 6 squeeze. Shorts have to unwind. Bulls are initiating, calling this not a triangle, but instead like a wedge. Again, the delineation isn't super important, but I think that people understand wedges as being precursors to reversals, and people consider triangles as being precursors or as being continuation patterns. So nevertheless, now we're at 22 minutes. So, okay, time to fuck off. Thanks for watching.